Hey traders, Keel here with Tier 1 Trading, and welcome back to another Trading Edge video. An early one today. Typically I try to release these videos in the afternoon and show you more of a longer term trading opportunity on the radar. Today I'm going to give it to you bright and early in the morning because I have something that may actually benefit more of the intraday style trader. So it's something that we may see form today or really within the next few hours. Speaking of the next few hours, we are hours away from launching our new website live. So that means all of you guys that have signed up over the last few weeks over at tier1trading.com, keep an eye on your email because you should be getting something soon, if not already, telling you how you can have access to the website, how you can set up your membership, and how you can register and save your seat for the free emergence event that we have coming up next week. Or you can also just click the link underneath this YouTube video and you'll be able to do the same thing. So we're going to start things off today by looking at the euro dollar. And the euro dollar has been an interesting pair. I haven't traded too much this year. I've been more focused on building out the new training courses that we're working on. But I've actually taken 2 of my 5 trades have been here on the euro dollar. So far my year has been, well, it's been exactly how I expected. Again, I haven't been paying too much attention to the markets, but I've been hitting at the same 55% win percentage that I usually am. I had a win on the euro dollar. Then, if you remember last week's video, I had a loss on the euro dollar as that bat formation got blown out the water. I had a good trade on New Zealand dollar, had a losing trade on dollar yen, had a good trade on Aussie Canada. So back and forth, which may seem frustrating to some, but again, that's me as a trader. I'm about a 55% trader, so I typically win just as much as I lose. The difference is I make sure that my wins are bigger than my losses, and that's how you can keep that type of win percentage and still make a really good amount of profit. So we're going to go right back to the euro dollar today, and we're going to talk about an opportunity that we covered 2 weeks ago. So the euro's been one of the more popular pairs that we've been covering in this Trading Edge series, and it's been really one of the few pairs that has offered a lot of opportunity. And I'm just going to take you back through some of what we looked at. Now, a few weeks ago, we had a nice double top trade right here. So this was a structure-based counter trade right at this area. You can see the market rolled over very nicely from that area, giving us a good win. The market then retraced up, giving us the opportunity for a potential 2618 trade and a potential bearish bat pattern. And you can see that the market blew right through. Well, after that, we were looking for a trend continuation trade. We made the prediction probably about 2 weeks ago that if price action broke above this level, there was a good chance that we could continue higher. And if we could continue higher, where were we likely to continue higher to? Well, there were 2 levels that we were looking for. There was an extreme level all the way up here around $1.40, but there's also a minor level of structure right here that would be the next, I don't know if we want to call it stopping point, but the next yellow light. So the next point in the market where it pauses, maybe gives us a little bit of relief, which is what counter trend traders are looking for before extending higher. And that's exactly where we're at right now. And this is going to be called, it's going to be a counter trend trade, a structure-based trade. This is also going to be called a CTS trade. So this is where we use our combined technical score. And what's cool is it's almost exactly the same as the first euro dollar trade that we took. And that just goes to show you that the market doesn't really have that many tricks. And people look at the markets and they think it's this confusing beast that offers 18 million opportunities every single day. That's what the market wants you to think. The market puts in a series. It only does a few things. It goes up, it goes down, it goes sideways, it double tops, it consolidates, it breaks out. It only does a few things. What makes it tricky is that it gives you all this other junk to try to confuse you. The best analogy that I've always used is that magic show analogy where, again, you have a magician doing the sleight of hand. They're doing the trick right in front of your face. However, all of the stuff that's going on around you, all the movement, the whole story they tell you, the talking they to you, the talking that they do to you, that's to distract you from what's actually going on. So our job as traders is to try to avoid those distractions and focus on the actual moves that the market is doing. And when we've learned what moves work and what these moves look like, and we know how to identify them and pick them out amongst the rest of the smoke and mirrors, It's not that hard to find good trading opportunities. So here's what I'm looking for here. Let's draw a red line out because we talked about this level. Boom, right? You can see price action coming up to this minor level of structure. So we have minor structure right there. Well, what else do we have? Well, if we look at our last move up, right? If we take this swing low to swing high, we copy and paste this level, boom, tagging on here, we have what's called an equal measured move, or an AB equals CD pattern. You have your A to B being this first leg, your B to C being this retracement right here, and your C to D move being right here. It's an equal measured move, meaning the market put in a second move the same length as the first move. And this is another good sign that we can use for a potential counter trend trading situation. So we have minor structure, we've got an equal measured move. We can take our Fibonacci extension tool and draw on a Fibonacci extension from that previous move, swing low to swing high and back down. You're going to see that we have a minor fib there, a 1414 as well. We also have some RSI divergence. And what I mean by that is if we look down at our indicator, let's go ahead and give myself some more real estate, right? We have the market making higher highs here on our price chart. However, if we look at our RSI, what do we have? We have lower lows, or lower highs, excuse me. That's called divergence, when your oscillator or indicator is doing something different than your price chart. And these are all clues that we're putting together to build a case for entry. And when we talk about the CTS system, the combined technical scoring system, essentially what that is a way to quantify trading opportunities. So instead of looking at a chart and seeing this one day or seeing that the other day and really not having any consistency in how you trade, it gives us sort of a checklist of what we're looking for each and every time we look at the market. We give each of those items on the checklist a scoring value, and then we add the value up, and makes it really easy for us to say that, hey, if I have a value of 5 or above, I can take the trade. Or if I have a value of 8 and above, I can use a full position, you know, however you want to orchestrate it. But it keeps us consistent in our analysis and what we're looking at in the market. And of course, you're probably sick and tired of me saying this. Well, maybe not yet. I said this, I think, every single video in the training course I just did. But consistent execution, consistent analysis, plus a consistent execution brings consistent results, right? Remember that. Consistent analysis plus consistent execution brings consistent results. Meaning if you look at the market the same way and analyze it the same way, and you actually take the trade the same way, right? You can't just analyze it and then punk out when it's time to push the button. You take the trade the same way, take all the trades that you're supposed to take. You should have consistent results. So remember that. So what we're looking for here is essentially the same thing we looked at the last opportunity. Price action down on the 4 hour has already gone massively overbought. We've retraced a little bit. What I would look for is a simple double top. I'd look for a retest of structure and a chance to get short at this retest of structure. And again, this is almost the same exact thing, right? If we take a look at this, right? The same exact thing we did previously, where we put in that 1-to-1 measured move from here to here. We put in a double top. We retraced down. We made some profit. And then the market went on its way. So almost an exact duplicate of what price has done previously. So a good trading opportunity there on the euro dollar. Let's talk about a short trading opportunity if you guys are new, a selling opportunity here on the euro dollar. Let's show you guys what the risk reward would look like really quick. Say you get involved somewhere up here, stops above the highs of your double top. You can look for targets. Again, it's going to vary depending on your technique, but if you're a structure-based trader, you can look for targets at a retest of the 121 even handle. So this psychological number down here. You got 121.50s in there as well. That's another psychological level, but 121 even is going to be the bigger one. So a nice 2-to-1 risk reward. And as I mentioned earlier, when you consistently set yourself up with good risk rewards, you're going to put yourself in a good position, even if you're not this 80% winning trader. So, all right, that's a little bit longer than I thought. Real quick, just want to recap. New Zealand was another one we talked about last week, looking for the trend continuation opportunity. Did exactly what we thought it would do. It broke and closed above on the daily. We came back, we got that retest, and then boom, we exploded up. Currently, we're retracing back into that level of structure, back into this kill zone. So if you didn't get involved in this first move, this is the area where you would be looking to get involved in the second move. You'd be looking to involve yourself in a long opportunity in this retracement level. And again, we can still look for a move higher. I think we can go as high as the top of this pretty red box. So 73.50s up here. So a second opportunity for trend continuation traders to get involved in New Zealand dollar. So one counter trend trade for you, one trend continuation trade for you. It's been a good year so far. Make sure you sign up for the Emergence event. Make sure you sign up on our website and get your free membership and start involving yourself in the community. Again, if you're already registered, there should be an email coming out to you soon, or you can always just click the link below this YouTube video. We're excited. It's been, we've done about a year's worth of work in probably about a month and a half now, less than that, a month. So we're excited, we're exhausted, we're dead, we're hanging on to the last bit of energy. But the feedback that you guys have been given, that's what's been keeping us going. I seriously mean that. Every time you guys are saying, hey, Keo, I can't wait. Hey, Keo, I love this, I love that. Or Jason Greystone is sharing the comments that he got. That gives us the little bit of boost we need to say, all right, let's record this one more session before hitting the hay. So appreciate you guys as always. Also, if you're new to this YouTube channel, like, subscribe, share, all that fun stuff. And until next time, plan your trade, trade your plan. I'll see you guys in the Tier 1 trading chat very shortly. Take care.